This episode's made possible by Planful. Hello and welcome to Planning Aces. On today's show, we'll be featuring the FP&A insights and commentary of three finance leaders, including CFO Ina Knoll of Bowflex, CFO Jamie Mock of Moderna, and CFO Peter Benavides of Olo. This is Jack Sweeney, your co-host, along with performance management guru Brett Knowles, who will serve as co-host and resident thought leader as we seek to highlight the takeaways from our distinguished group of Planning Aces. We'll begin after this.
Hi, I'm Rowan Tonkin, Chief Marketing Officer at Planful, and we're a proud sponsor of CFO Thought Leader. At Planful, we're empowering teams just like yours to drive peak financial performance in every corner of your business. What sets Planful apart? We have purpose-built applications for every department, from FP&A to accounting, marketing to HR, all with built-in financial intelligence. This means we can get you up and running within weeks, and it requires minimal IT involvement. So you can rapidly and seamlessly engage everyone across the business in your key financial processes. Best of all, you can't outgrow us. We take the pain of growing away with an unmatched ability to scale with you. You have an endless runway with Planful. See why over 1,300 customers around the world choose Planful as their flexible, user-friendly, end-to-end financial performance management platform. Go to planful.com and see how you can make financial performance a team sport in your business.
Hello, everyone. Thank you for joining us. This is Jack Sweeney, and I am, of course, here with our resident thought leader, Brett Knowles. Brett, where are you, by the way?
I'm in Toronto.
Really? Well, that's nice. Nice to find you home for a change. I think I owe you an explanation. I think I had shared the view in the past that we had done the COVID story enough. We didn't have to go back and have finance leaders share with us how they responded to the arrival of the pandemic or what have you. And clearly, there are quite a few episodes where that's discussed almost in real time as it was happening. So I thought it was a subject that had really been explored widely on the podcast, on CFO Thought Leader, as well as Planning Aces and even Workplace Champions. However, it was in the last quarter that we had three CFOs that had such unique stories related to the pandemic. Businesses, including, of course, Jamie Mock, CFO of Moderna, CFO Ina Knoll, who's of Bowflex, which for those of us who might not recall, Bowflex, formerly Nautilus, the fitness equipment, if we can imagine the home fitness market took off, and Peter Benavides, CFO of Olo, which is a restaurant SaaS application. They outfit many restaurant chains and fast casual restaurants. Can you imagine the mobile ordering capacity of this software was certainly tested during the pandemic, but each experienced sort of this extraordinary leap upward and then return to earth. And I thought it would be compelling just to share their stories side by side and ask you, Brett, to identify some of the takeaways for us from the lessons that they share. We'll play some of the commentary that they provided us with. Any thoughts up front here?
A couple of things. My executive summary would be, what we hear in these conversations is the tip of the iceberg. So the presenting issue is, how do I deal with this lift that these companies had to have, and then the subsequent downfall. But that's the tip of the iceberg, because the real meat of the subject is the endless impacts that COVID has had on all of our organizations. And obviously FP&A is part of it, but we know the work from home conversations that are going on, or multimodal. The fact that we hired a bunch of people that will never be in the corporate offices, there's a lot of lingering artifacts that have come out of COVID, and this is the tip of the iceberg. But many of the lessons here can be applied to some of these other things as well.
Brett, when we put you on the spot here to sort of give us an overview up front here before we hear the commentary, I always think it's interesting when you identify something they have in common. As you look at some of the themes they're dealing with, or it might be, again, they have the circumstances in common, but what about their leadership or their outlook?
Yeah, I think the story behind that overview, Jack, is what's that expression? The high tide lifts all ships. So yes, Aina is in the home gym business, but so are others like Peloton. All your competitors are getting the same lift. And so, yes, you might be able to make some gains during the lift. But what's interesting about these three stories is they're all talking about the long game. What happens after the lift? And that might be the more telling story about how FP&A can help us thrive in these fluctuations. To me, the biggest common thread I see between these three CFOs is that they're all the voice of reason. They all took positions that were beyond enjoying this sudden market surge that we're having and trying to figure out, so what do we do in the next wave or the next trough?
Well, our first planning ace then will be Ina Knoll of Bowflex. Ina joined us for episode 958 of CFO Thought Leader. She spent over 20 years advancing through the finance ranks at Gap Inc., where, in fact, she was CFO of Gap China. One of her more intriguing chapters that she shares with us, how Gap expanded into China on that one episode. Also, she shares some of the vision behind Bowflex's latest chapter in connected fitness, which is very data-driven, all on that one episode. But right now, and I think you'll hear Ina touch on that in the following commentary. Again, CFO Ina Knoll.
So we created the plan to begin connecting the machines to this AI-oriented platform. And we actually decided early, we're not going to even try to compete with the classes. Many people offer classes. We'll just rent them, buy them, license them, but we won't create studios. We're going to focus on finding the AI path. Like, how do we actually truly create an interactive, adaptive platform? Then COVID hit. And suddenly there was all this demand, and we hadn't really issued the new products yet. So a lot of the old products. But what we did with COVID that I think we did really excellently is we used it to empty our warehouses because people were willing to buy whatever was available. So we were able to successfully empty our warehouses of all our old product. And then we started making the new product. And then the goal was, how quickly can you make new products? Because the demand seemed like unstoppable. But I said, there's only so many machines one can consume in a short time period. And I think we have to be prepared. And we had actually said 2 years up and 2 years down. So there were 2 years up. We were ready. But I said, we have to be ready for 2 years down. So we didn't grow our headcount as quickly. We chose to rent versus buy. We did a lot of things in preparation for the downturn. But at the same time, we were building the new Bowflex that we had imagined in 2019. And that began with identifying who really is our true target customer. We created a muse. We know a lot about this person. We've named her Remy. She likes variety. She likes to be challenged every day. She does not like classes. She prefers to do things individually. We built a team that can create products that are in an iterative fashion rather than, let's design something and then we just sort of throw it out at the world and hopefully people will buy it. It's a lot of interaction with the consumer, a lot more product testing. And then we built a team that could create the Journey platform. All that while we were handling the up and down of COVID. And a lot of what really hurt many companies with COVID is what happened with supply chain. I mean, it's stories. We're going to tell each other these stories 20 years from now. That like it just was unprecedented, a lot of challenges for companies to overcome. But for us, we needed to make sure, and this is what I kept telling the team, every single quarter we have to make the continued progress on the long-term strategy while delivering, maximizing the benefit that we can get from short-term COVID gains. Get the cash, bring it in, and then use it to fund what we're doing with Journey. So what I am so excited about with our company is we have the vision that we created when Jim brought the team together. I love it. It's to build a healthier world, one person at a time. It's about the individual. We're going to make the best strength and cardio equipment, and then we're going to connect it to this unique, individualized platform that's intended to make you achieve your goals. And we are about 90% there. So when I encouraged the team, I said, I know externally people think we are a COVID darling. Oh, they went up and they went down with COVID, but they don't see what we're doing underneath the waters. And the new set of products that we're going to be delivering to the company in next year and the year after are really the reflection of all the work the team has done in the last 3 years. And I'm so proud of them. It really is like just the grit and the resilience to be able to withstand all the ups and downs externally. Because when we were looking at our long range plan, I don't think we did not anticipate that with the downturn from COVID, like demand coming down, we would also have the inflationary. That was not in our plan. I mean, the inflationary pressure, the interest rates rising, like all that was not in our plan. And so the combination of those two things have been quite difficult, but we have little green shoots of promise coming out, and I'm excited. I think the team has grown a lot. They've really become more resilient, and the new products that we're delivering to the market in the next year and a half, 2 years, I think are really the reflection of the new Bowflex.
Well, there you have it. To your point, Brett, the voice of reason. We can hear Ina Knoll's voice alongside her CEOs, sort of guiding this company through these uncertain times, navigating this sudden swell in demand, and again, the return to earth.
Yes, yeah, absolutely. Well, I think it's important to note before we go too deep into it that this is not a COVID artifact. We see a similar situation again and again and again. And the example that comes to mind, because I'm Canadian, is BlackBerry, right? BlackBerry saw a huge surge when sexy smartphones just came out because the BlackBerry was out before the iPhone and it caught the consumer's interest. And so sales for BlackBerry surged, and they mistakenly didn't plan for the next phase. They thought that the surge is because of their data security and their private network and all those other things. And of course, when the iPhone came out and it began winning the hearts of consumers, their BlackBerry's sales plummeted, and they'd not planned for that. They'd not thought beyond that surge, and they'd mistakenly thought the surge was because of the integrity of the system. And that wasn't the case. And so they were left in a pretty destitute financial situation. And so again, these case stories happen to get the lift because of COVID, but those lifts happen all the time. And the lesson here is in FP&A, we've got to be the voice of reason. We have to look beyond that immediate surge and make sure that we're laying the foundations for what happens next.
She did use that 2 years up and 2 years. She foresaw. She understood that there needed to be, as in her own words, 2 years up, 2 years down. She saw that much.
Yeah. Now, it would be nice to think that there's some brilliance there, and she should maybe buy lottery tickets or something. But it's a pretty predictable cycle. Almost in any product, the surge is followed by downdrafts. Now, again, I used the example before of the iPhone. There's an example where it just keeps on growing year over year. But that's the exception, not the rule. In most cases, there is that slight step back that happens. I thought what was particularly interesting about her approach is what they did about it. So, yes, we're enjoying those 2 years up, but if you recall, they came up with this persona, an avatar, and I think they called it Remy. And the idea is they got a very hard fix on what this person looked like. And that gave some people in the organization something to focus on during the lift, right? So if you don't have the lift, if you're having the lift, all you're doing is you're focusing on the lift. She's kind of going, the lift is important. We got to keep funding that. But I want you to focus on this new person, this person that's going to be showing up after the lift. This is what that person wants. And we need to focus everything on that. So as an FP&A person, I mean, that's a very strategic decision to make.
It's interesting how a persona or avatar it really helps organizations focus. But here she's using it to draw us into the future. Take out your telescope, and this person isn't living among us yet. It's in the future. It's post-COVID. Do I have that right, or?
Yeah, I think you do. I mean, the idea is now that we've got to focus on this avatar, this persona, it kind of changes everything. So the example that she gave was their innovation cycle. She said, before the idea was they'd come up with a new product, fait accompli, launch their product, and cross their fingers to see how it goes. Whereas now they've got this new persona and they moved on an iterative journey towards that person. So small steps, test the market, small steps, test the market, and so on. So a much more, again, voice of reason, logical journey forward into a market that they didn't understand, but they were gambling was going to exist. And I think it's a good gamble, right? That in their case, that persona makes a bunch of sense. So we know that all the gyms and LA Fitness and so on, once lockdown ended, they had a big push forward. Companies that built that personal trainer into the system, such as Peloton, saw the lift, but then had that terrific crash afterwards. And they're saying there's a different person that we're going to chase, that person that wants to do workouts on their own, is self-motivated and so on. And that's a very interesting and not all that unique of a person. And that focus on it as it impacted other parts of the process. And she only talked about innovation, but you can understand how that's going to change your revenue stream because you're not going to have a subscription base and so on. I think it was very interesting, her ability to take a look at the short term and the long term at the same time, even though they're focusing on two very different markets at the same time.
Well, our next planning ace is CFO Jamie Mock of Moderna. Jamie joined us on episode 963 of CFO Thought Leader. Now, as Jamie explained to us, you go back 5 years pre-COVID, and Moderna is really just a research company. There's no commercial products as of that time. Meanwhile, when Moderna comes out with its COVID vaccine, it captures $40 billion in sales within only 2 years. Now, Jamie Mock joins Moderna in September of 2022. So it's after the vaccine has arrived. His chapter, this CFO chapter, is really going to be the post-COVID chapter when it comes back to Earth, when it has to introduce new drugs, new products in a short amount of time. This is Jamie Mock, CFO of Moderna.
When we were having $18 billion in revenue and we were fortunate to have a lot of income, nobody worried. Everybody said, okay, invest as much as you'd like in R&D. Now we've set guidance as an example for next year that will be about $4 billion in revenue. And we're still going to invest a lot in R&D. We said, I think, $4.5 billion in revenue. So we're actually going to guide that we're losing money next year. And that was on people's mind. And they were like, people are saying, hey, you're fortunate to have a lot of cash. We started this year with $18 billion. We guided that we'll end next year at $9 billion. But people were starting to say, when Are you going to make money? And so that was what we had to put a lens on is, yes, you're investing in all these wonderful products. Yes, some products will come to market, but when will you actually turn a profit or at least break even? And that's what we recently went to market with, is to say by 2026, we will break even as a company. And yes, over the next 2 years, in 2024 and 2025, we are going to invest a lot of money and most likely lose money. But we think that's the right thing to do because we have this incredible platform that is going to bring a lot of drugs to market and someday will be a very different financial profile with many drugs and a much higher revenue and much higher profit. And so that is what we had to bring to investors is, when will you break even? How much cash are you going to burn through? Yeah. Well, I'll tie it to this whole, we're going to launch 5 products in 2 years and 15 products in 5 years. I really think, I mean, that, and I view our role, but my role as well, as we need to navigate this time period. It is going to be the low part, knock on wood, of our revenue moving forward. And we still have to invest super smartly to actually bring those drugs to life for patients. And so for the next 12 months, it is, my team will get sick of hearing it, risk and return. What are we spending our money on? Because capital is not infinite here. And yes, we are lucky and still fortunate that we have a fair amount of capital, but we have to scrutinize every investment to make sure it's the right investment so that we can bring those 5 or 15 drugs to market. Because after that, the financial profile, if that's done well, the financial profile of our company will be wildly different. And so I really think the next 12 months are pivotal in getting us through those 2 to 5 year time period.
So this is the year. This has to be the year, as Jamie Mock explains, that Moderna turns the page and modifies its financial profile in the minds of its investors. So there you have it. So Brett, what did you make of what Jamie shared?
Well, I think your preface was bang on, and that is no different than Bowflex had to reinvent itself for this post-COVID wave. Not many people really knew who Moderna was before COVID. They were lucky enough to come out with a vaccine early in the process that was accepted. And so they got that huge lift that might have been a fluke. And now it becomes the job of the organization to say, what happens post that wave? And as you said, the argument they're presenting, and by the way, it's endemic in the pharma industry right now that the drug pipeline is terrible. Most of the pharma companies are really hurting for, what the next drug's going to be. And so Moderna is taking this interesting position of saying it wasn't a fluke that we were first out with the vaccine. We've built this fast cycle R&D engine, and these are the commitments we're going to go make. And yes, we still have to go through the approval process. Yes, it's many years and many millions of dollars. What we've carefully done is built up a war chest to support that, right? They went from 18 billion in revenue down to 4 billion, but they left an 18 billion, reserve bank account. They're going to bleed down incredibly quickly, but they've got this wonderful case in point. Same thing with Bowflex. Take a look 2 years out. Fixate on what that looks like. In this case, the persona is about this fast cycle R&D capability, and then drive aggressively towards that. And in this world, you have to help the market see what you're doing. So again, it's FP&A taking a very strategic approach and being a strong voice in strategy, and then ensuring that our work as a planner gets communicated to the market, and secondly, actually gets executed in the organization.
Yeah, to your point, Brett, communication to the market. What Jamie Mock, I believe, has been up to. Not only does he want to educate his investors and his analysts, but he's speaking to us. The greater corporate finance community plays a role here as well. And so we often hear how the role of finance leadership is broadening. Here, Jamie Mock, I believe, believes his communication likewise has to be broader. Spread the news far and wide.
Well, here's a skill testing question for you, Jack. What do you think this story might have been if it was the same CFO that saw them through that high rise with the vaccine, as opposed to a new person? do you think the story would be the same or might it be different?
Wow. That's interesting.
Do you think the previous CFO could have done the pivot that we saw happen? And this is important because if with Bowflex, Aina, came in right at the crux of it, but saw it through the journey. In this case, we changed. It's like a relay race. We changed runners partway through. Is that something that actually made this happen? Or in organizations, what do we need to structure in order to do this kind of significant pivot?
I think one thing's for sure, you don't want to make a bad hire. And I think it might be early to say this, but I think Moderna got lucky with Jamie Mock, who is this powerful communicator. And no surprise, I don't know, something like 17 or is it 20 years at General Electric, where their management programs just produces these great communicators. If you needed someone to really educate the market about fast-paced drug development, I think few are in his weight class. I might be overstating that, but I don't think so.
Well, that's what I'm poking at. So I don't agree or disagree. This is just one of those what if questions. But, imagine now that you're that previous CFO. You've seen this fluky, incredible rise because of the vaccine. Do you fall on your sword? Do you go, you know,
Again, it was just over a couple of years that Moderna brought in $40 billion.
right. So, you can imagine if you're in that position, you have one or two ways to play it. Like, I am truly a Jedi Knight and I can do this again. Or we were super lucky. We're able to be at the right place at the right time. Now the next step needs a different type of leadership to drive it forward. So the parallel here is, it's often said that once a startup gets to 200 people, you need a new CEO. Once the 200 person gets to about 300 million, I need a new CEO. Once I then move to IPO, I need a new CEO. In other words, there are these transition phases where common business etiquette, acumen, no, tradition has it that you have to switch leaders. I'm wondering if what we're seeing here is one of those situations where, unlike Bowflex, is having that new leader almost something I needed to structure in order to make this pivot.
I see your point, and I should just mention in the case of Moderna, the prior CFO did resign, and it was more of a personal issue or some sort of chapter from his past. It had nothing to do with the operations of the business, as far as I'm aware. Uh, but to your point, yes, I mean the notion that there wasn't place and time. He steps in with a fresh set of eyes, with a fresh way of perhaps articulating the challenge and the opportunity ahead. It seems to me like it could not have been better. It seems very well timed. Now, he's in, as he's described, the next 12 months. He's got
Right.
all the heavy lifting to do. So
Right. So again, to restate history, they switched out runners and put in Jenny, and then um, he has a different set of qualifications and um, behaviors and strategies than the previous person. So we're able to make that faster pivot because of all the things you just listed.
well, permit me to jump forward with our next planning ace, who is CFO Peter Benavides, CFO of Olo. Again, Olo's a SaaS application developer specializing in restaurant software. Many of the he refers to them as enterprise restaurants, large chains of fast casual restaurants. These are all Olo's customers. Uh, Gives a nice overview. And back to your theme here of having that long term mindset. That is without a doubt the mindset of Peter Benavides. Here he is.
The restaurant industry is a massive industry. It's $1 trillion industry. And if you look at wallet share, what is happening, and this had happened pre-COVID, It inverted during COVID, and now it's back to an environment in which, when you look at every dollar that is spent on food, the majority of that dollar is going to the restaurant, right? So consumers are more and more eating out or using restaurants, if you will, as a means to consume food, and less so from a grocery standpoint. So I think it makes the macro maybe increasingly important as you think through that dynamic. One of the things that we've been, I'd say, focused on for a number of quarters now. So maybe going back a little bit further. So part of our revenue model is consumption based. So it's dependent on the number of orders that are being processed over the platform. As you would imagine, during COVID, we had a huge acceleration of the business as digital ordering had really become the only way for consumers to interact, apart from the drive-through, with restaurant brands. And unlike other e-commerce beneficiaries, if you will, from COVID, the restaurant industry has not regressed to the mean. So if you look at digital ordering as a percent of total transactions, it's been pretty stable at about 15% of transactions are digital, which to us, and I think others, reflects the kind of the stickiness, if you will, in terms of the habits that were formed as a result of COVID and food ordering that are here to stay. Now, that I think we have a pretty good handle on in terms of how that's evolved post-COVID. Where we're now turning our attention to is consumer behavior against the backdrop of all of the macro uncertainty that's out there. And in particular, how does that impact food ordering? And we look to kind of that 2007 through 2009 timeframe to say, what can we learn from then that might be applicable to now? And there are a couple things that played out, and some of this I think is probably pretty obvious. The first is consumers tend to trade down, right, when there's economic uncertainty or during inflationary times. So as opposed to going and spending X amount of dollars on a higher priced burger, maybe they go to a lower priced offering. If you look across our customer composition, about 2/3 of our customers would fit that limited service food type, which is that lower priced food type. So to the extent that transition happened, we're somewhat insulated, if you will, from that dynamic, given just our customer composition. The other thing that we saw when you look at the data during the financial crisis is enterprise restaurants tended to benefit both from a sales perspective, but also from a location growth perspective, to some extent at the expense of smaller operators. And the reason for that is, in most cases, enterprise restaurants are well-funded. Many are public or private equity backed. Their access to capital is greater than the sort of average mom and pop restaurant, and it allows them to be a bit more opportunistic as sites become available, et cetera, and their ability to grow. Again, I think that would be, to the extent that dynamic played out, we'd be somewhat insulated from that because of our focus on the enterprise segment. So I'd say those are the things we're looking at now, is like kind of those macro trends, what's happening with the consumer and their ordering behavior, and then how does that ultimately flow through to the YOLO model, et cetera, and less around kind of like the COVID dynamics, which I think have been all normalized by now.
Well, for those businesses that serve the restaurant sector, it seems like the economy will always be top of mind. Peter Benevides, looking at some of the lessons from COVID as well as the financial crisis, all in preparation of what might come next. But what did you take away from what Peter shared?
I thought it was interesting in that he went into a little bit more detail about his FP&A metrics, or the things that he's looking at, more than our last two. And to be honest with you, I had to sort of listen to it several times to sort of extract it all, because he's, looking at, the increase in restaurant demand post-COVID, decrease in people buying groceries, makes a point about, looking at the macro picture is important. But then he goes and talks about how their revenue is order based and 15% of it's digital. And I'm trying to figure out, okay, the 15% digital, how does that reflect to more people ordering at restaurants and so on? And the part of the market that he's in, where he describes he's sort of in the lower part of the market, where consumers are trading down in rough times. And so 2/3 of their customers are lower. And so I'm beginning to figure out, or trying to figure out, what are all these variables, these plates he's spinning. Yeah, it just reminds me that in the FP&A world, it's never that simple. You can never go, like Ina did. It's simple: 2 years up, 2 years down. That's a tip of the iceberg, simple model under which these very complicated models that Peter's describing exist.
Yeah, and to be fair to Peter, I did ask him a macroeconomic question because I think the nature of his business as he engages with investors, they are always bringing up the economy at large because it's so reflective of consumer dining habits.
But what I thought was interesting is the number of trends that he talked to us about that were counterintuitive. So, for example, that there's, an increase in demand at restaurants. I would have thought once COVID was over, people would be going back to groceries and making stuff at home and stuff. But he said, no, demand has increased. That was an interesting point. Then he talked about how, even though there's more people going to restaurants, consumers trade down in rough times. And so by trading down, he talks about, downgrading the level of restaurant that you're going to. So I'm increasing the number of visits at lower grade restaurants. And then he made a point about enterprise. It sounded to me like he was talking about franchises and so on. Restaurants did better than the standalones. And so, again, he's optimizing against a bunch of different trends going on. And it seems easy for Ina, where she goes, here's the persona, Rennie, that we're chasing after. Or Jani that's saying, I'm chasing after that fast turnaround R&D cycle. For Peter, I think, you're chasing around the transaction. If there was a market segment that I thought I heard him describe, it was the number of orders in the lower end restaurant structure. But it wasn't as definitive to my brain as the first two stories I heard. But the theme is still there. Peter is still the voice of reason. He's looking at this and going, this is all the things that we need to play with, and we can't ignore these. So the common theme across all three of these CFOs is they're the voice of reason. Whether it's being pragmatic and understanding it's 2 years up, 2 years down, understanding I've got 3 years where we're running negative revenues, a negative free cash flow, or in this case, we've got all these variables which are changing in an unpredicted way that we need to be mindful of. It's super important as FP&A professionals that we are the voice of reason, that we don't get caught up in the updraft and take our eyes off our role of ensuring pragmatic plans are put together.
I think you could make the argument that this generation of CFOs have sort of been battle tested in the fact, turn back the clock 15 years. Many of them were on the front lines with the economic downturn. Go back another 7 years. Many of them were tasked with helping clean up the dot-com wreckage or, the aftermath of that economic situation. Makes me wonder, by the way, what if the pandemic, we had a pandemic 20 years ago, how businesses would have responded?
It would have been completely different, is all I'm going to say, because we didn't have the enabling technology. So a lot of things that formed our response to COVID it was just at the right moment where things like Zoom were available to us. And we had enough computing power that everyone could be running videos at the same time and so on. That was not there 5 years or 10 years before. So COVID was very thoughtful and happening at a time where our approach could be the one that we took. But it happened 10 years before. Yes, our economy would have survived, but it would have survived in a different way. The issue is, because it happened when it did, because of decisions we made, so not only our ability to work at home, but also decisions like hiring people from cities outside where our head offices were, not being thoughtful of what's going to happen post-COVID. Like, those people are never going to come in to the office. We're committing ourselves to forever having a work from home environment, as an example. So those responses that happened at that point in time have these ripple effects. And that's what I'm trying to describe here, that our planning processes don't have a historic event that we can model. And because we've changed everything in our lives, we've changed how we work, how we live our personal lives, what our value sets are, how we work together. It's not an easy model to predict going forward. And it looks like we're going to continue to be stressed by these things. And I use the example of Ukraine and the Middle East. Who knows what's going to happen next? We need to move away from the old model where we look for more and more science and move to models which are more and more agile. There's that proverb, every plan fails on first contact with the enemy, which dates back to the 11th century. But basically it says there are three things that cause every plan to fail. One is we don't have complete knowledge, so we're making assumptions about what's going on. Secondly, the things that we think are going to happen with our people and systems don't always happen as we expect. And third, the market reacts to our plans in a different way than we predicted. Therefore, we can never have the perfect plan. We always have to be more agile. All I'm saying, and these three CFOs embellish the model of, is incredibly important to not say that we have knowledge about those three things, but rather we have the agility to respond to whatever might happen.
Nice way to wrap up the episode.
Well, my friend, I better hop off the phone.
Thank you, Brett.
Okay, see ya. Bye.
There he goes. He's off on another adventure. On behalf of Brett Knowles and myself, we appreciate you listening. And we look forward to having you join us on the next episode of Planning Aces. Goodbye.